Welcome back to Rockstock Channel. It is Tuesday, October 29th, 7 days away from the U.S. election, which we won't talk about too much. This is a Rockstock recap, but rather than just Rodney and me, occasionally we have a buy or sell side analyst guest join the conversation, and we are very happy to have, for the first time, YJ Lee at Arcane Capital Management or Capital Advisors out of Singapore. We'd encourage all of our viewers to follow YJ on X. He is at usually YJ Lee. I've been following him for a bit. He was responding to some of our friends who kind of cover the lepidolite market, and China. The lithium market over the past year in particular, which caught us by surprise, was, what was happening by Chinese companies in China and in kind of private companies in Africa. And YJ, I think, may have some additional insights on this. But YJ, we saw you first on the Money of Mine podcast maybe a month or so ago, and then you presented at the 1-to-1 conference in, I don't know if it was Hong Kong or Singapore. Rodney and I have a very good relationship with 1-to-1. I moderated a panel last week in New York. Rodney is going to be in London in about a week or two. He'll be moderating a panel and have some fresh views there. Actually, he'll be presenting, and participating in a panel. So we will actually have the 1-to-1 panel I moderated will be publishing as a video sometime next week. But just wanted to kind of mention that. But overall, we're going to play some snippets of you from that 1-to-1 presentation. I don't want you to regurgitate the slides there.
By actual installations, solar has gone absolutely ballistic. In 2017, 2018, we were talking about 101, 106 gigawatts being installed across the world. And last year, that jumped to 444 gigawatts. How do you add more solar when power prices go negative, right? The only way to do so is by putting in battery storage. You have to load shift this excess capacity from peak production period to peak demand periods at the end of the day. To install just 1 hour of storage in 2030 takes more lithium than is being produced in the entire world today. Electric bus has a battery about 5 to 6 times that of a car. And we forecast about 400,000 such electric buses to be sold by the end of this decade. If we want to do 1 hour of storage, we're going to use all the world's lithium being produced today. There are simply not enough mines in the world to deliver that kind of supply. Under the current low lithium price environment, companies globally have cut back supply for next year by 17% and for 2026 by 21%. The large caps are down 67%, the small caps are down 80 to 90%. If you want a bottom fish, this is the time to do so. Lithium demand is severely underestimated. Supply growth has been postponed and still continues being postponed, and battery storage still requires lithium. There is no alternative right now. Solar demand should trigger a price spike. There's a lack of substitutes, and it is very difficult to increase supply.
Fundamentally, you are outlier bullish lithium. You have a 4 million ton lithium demand forecast for 2030, which is higher than Arcadium's upgraded lithium forecast from their investor day, which was at 3.5, and is higher than Albemarle, which had been at 3.7. They ratcheted it down to 3.3. But I think broadly, to summarize why you're so much more bullish, and it's a function of energy storage solutions, which Rodney has also been outlier bullish on, solar in particular, but also EV trucks, buses, and other kind of large format. Since you're 1-to-1, this is Rockstock recap, so we do want to talk about the current news. I mean, since your 1-to-1 presentation, Tesla's reported results, which were great. I don't know if you've analyzed those, but energy storage was excellent there. But there's also, expectation on a cheap car, coming out next year, but they didn't give great details on it. We had a deal, Aramet, in the DLE Argentine space, bought out their Chinese partner, Qingshan, which seemed interesting. We could talk a little bit about that from a valuation perspective and what the read-through might be. Minres has been in the news about Chris Ellison. We're not going to talk too much about that, but it has created, a fair bit of volatility. This time last year, Western Australia was in focus from the lithium space in terms of M&A, Hancock, and Azure and SQM. But, Western Australia for much of this year has just been supply reductions. And then when it comes to like Tangshi, Kwinana, and Kemerton, significant kind of scale backs. And on my panel at 1-to-1, Resource Capital analyst was actually talking that, distressed opportunities in the current market might be picking up, actually Albemarle and or Tangshi divesting of those properties. So there's quite a bit of shine off of the Western Australian, lithium story, although obviously Pilbara, is doing okay from a cost side. We've also had some earnings that have come out. So long intro. Rodney has a few questions. This, I don't know exactly what the agenda is, but YJ, why don't you just kind of introduce yourself a little bit and maybe make some comments and observations on some of the things I just referenced.
Okay, cool. Hi guys. Thanks for having me here. My name is YJ. I'm a fund manager based in Singapore. We manage, with Arcane Capital Advisors, we manage two funds, one based in Luxembourg, that's called the Solar and Sustainable Energy Fund. That's a broad renewable energy fund. It's invested in everything from solar to wind to EVs to batteries, lithium, and all the supply chains. This fund has been around for about 15 years now, since 2009. We've kind of outperformed the green indices by about 9 to 10% per year over these 15 years. So that's kind of our track record. And recently in Singapore, we launched our second fund. It is called the Arcane Green Metal Fund. This is a fund that where we invest purely on the miners that produce the metals for the energy transition. So everything from lithium to nickel, cobalt, graphite, silver, copper, these are the metals and the miners that we investigate and we invest for this portfolio. So we have these two ways to play the overall energy transition theme.
Okay, great. And you've had good track record. We're going to focus exclusively, I think, on lithium in this. And, again, we've all been kind of waiting, right, for maybe a demand shock, right? There's been an oversupply because of lepidolite, because of, African, spodumene. But, I keep hearing, there's massive overcapacity of cars, but also batteries. Like this 50%, capacity utilization only, in battery manufacturing. We're seeing, and I think there's a lot of excess capacity in Chinese conversion. We're seeing stellar numbers every month out of China and elsewhere in terms of EV uptake, but it's not translating, into, yet an uptick in lithium prices. That said, lithium equities have been performing quite well, and we had this lithium live stream 2 weeks ago, and I was asking the question: is the rally because of the M&A, or is the rally in equities forecasting a near-term rise in prices? We haven't seen that rise in prices, so there's still some volatility here, but like it feels like it's getting better, right? But it's also, we're getting into tax law season time, short interest, depending on the stock is going up or down. But like navigating, this, like when to get in and what to get in, because a lot of stocks are up like 100% on the ARK equity scoreboard, and then exploration stories like Q2 out of nowhere. They've had good results and stock went up. Then a company like Raiden Resources, went up 100%, then it went down 50%. Lake Resources, had this rally. So there's a lot of speculation, happening here. And again, we have a U.S. election that, in my estimation, it looks like Trump is more favored to win. And he is very still, as much as he's embracing Elon Musk. I just watched his rally at the, Madison Square Garden, and and the Joe Rogan podcast, he's anti-wind, he's anti-solar, he's like, he's not supportive in a big way. And we can't just dismiss it, because last time he was elected, no candidate for president actually tried to keep to his campaign promises more than Trump in 2016. So for him to kind of make these statements, we can't kind of like dismiss it. So anyway, rambling a little bit there, but why don't you react to that? And
Okay. So to take it from where you started with the stock markets are usually forward-looking to about, I think, 4 to 6 months ahead. So maybe this is predicting a recovery in the lithium price sometime 3 or 4 months later. We won't see it move immediately, of course. I mean, it has to be stock markets. If they're forward-looking, it has to have a time lag. So, but I think we are there. We are coming to a point where the lithium price might start inflecting back up. We are too deep into the cost curve as it is right now. And on demand, I think the surge in at least a resumption of the growth in demand for lithium will come sooner than people expect. There's always what you could call a lag between the prices falling and the demand surging. It's all real world stuff, right? The price of lithium falls, batteries get cheaper with a lag. Batteries get cheaper, cars get cheaper with a lag, and then eventually it hits the consumer market after the production cycle. It hits the consumer market with a lag, and now we are seeing very cheap cars come onto the market in China. Models selling for less than 70,000 yuan. That's less than $10,000 for a car. Pretty decent car. It's not just a box on wheels with an electric motor strapped on. There are some fancy gadgets even in there. So we're seeing cars, many models at the 15 to 20,000 US dollar range, and that's profitable for quite a number of the Chinese manufacturers. Like BYD. So they've got scale. And to draw an example from the solar industry, when now that there's a similar thing happening in the solar industry to what is happening in the lithium and battery space. There is massive overcapacity in solar manufacturing. Prices have collapsed, and they're actually well below production costs right now. The manufacturers are just trying to clear the inventory, move it out, and some of them have already started cutting back production this quarter. But with the lower prices of the solar panels, you're seeing it put up everywhere. It's cheaper than fencing. Solar panels are being used as fences right now, right? So in the same vein, we're going to see batteries being put everywhere. It's gotten so cheap. I was just in Shenzhen 2 weeks ago, and believe me, every single bus, taxi, half the cars on the roads in Shenzhen, all the motorbikes, all the little scooters that people are driving around to get from point A to B if they're not taking these bigger format vehicles, they are all electric. The demand for electric transport has completely exploded in China. And this is just one of the tier 1 cities. The same thing is going to happen for tier 2, 3, 4 cities all the way. And then these things are going to get exported. Cheap cars, cheap scooters, cheap motorbikes, e-buses, e-trucks, these are all going overseas at lower prices than what the foreign the Western manufacturers can build. Look what is happening with Volkswagen right now. Just today, they announced that they're actually closing down 3 plants. They have never in their history closed plants. And I think, yeah. And this is a big political thing for them, but they literally cannot survive with old ICE ICE manufacturing equipment nowadays. The guys that have come into the market with brand new lines focused purely on EVs, they're absolutely killing the traditional ICE manufacturers.
YJ, that's what I wanted to sort of, if I can jump in and raise it there. So if you look at what's happened with the likes of VW, Mercedes, etc., selling into China, they've in free fall. So we're seeing losses across the board on all of these operators, whereas CATL's making money, BYD's making money. Now, the problem is with the levies being introduced and tariffs, I probably have upgraded my China EV sales because at the rate at which it's going now, it's exceeding what I had previously. So that's good going. Although we can have the discussion on plug-in hybrid versus pure EV, that's been a bit of a wrinkle. It's sort of outperformed. But are you still comfortable that Europe and to the US to some extent can get back on track when so few of the EV models are less than the ICE equivalents? Even though batteries are cheap, the traditional OEMs are not making EVs at cheap enough and not making enough money out of them.
Yeah, so I mean, isn't it interesting that BYD's first car container, they have their own car containers, right? And car container ships, and the next, I think the second one just got delivered. So they're going to have a whole string of these export vessels to shift their EVs out of China. Isn't it interesting that the first one actually landed, of all places, in Germany, right? So I think they were trying to make a pretty pointed statement right there.
And then in terms of Chinese EV companies putting plants into Europe and operating in Europe, do you think so? Is this the death knell for Western OEMs? Are they on the way out now? Are they really going to be up against it?
Yeah, I think we have to have an open mind on this and consider the very I would say very high likelihood that many, if not most of them, may not see another decade in existence. So this is a massive disruption period. We've seen many industries go through such disruptions, film, photocopiers and all that, right? So these are all examples where, the incumbent who's been around for centuries sometimes, simply just disappears when something new and much lower cost and better comes along.
So do you think then that that Europe, in terms of the transition to EVs, can get back on track as Chinese EV manufacturers operate out of Europe and can bring in competitive pricing? And because I think the demand is there, it's just the demand's not there. I mean, some of the models I've seen are just ridiculously expensive for what they are. If the pricing and the model range and choice is there, that Europe will get back on track to a high EV penetration.
Yeah, so there are 2 levels at work here. At the manufacturing level, if the Chinese come in and build their own plants, of course, they will hire locals, right? And then there will be a gradual shift of workers from the traditional Volkswagen, Mercedes manufacturing plants to the Chinese plants. I mean, the demand will clearly move the people over in, but there will be a transition period. It will be kind of painful. There will be some unhappiness in the, bit of unrest maybe. They like protesting there. But it's tough. It's going to be tough for them, and I don't blame them. It's a bad situation to be in, facing competition like this. But I think it has to happen. Otherwise, these plants are just going to shut down with no further recourse, right? And at the higher level, on the other level of the European Commission, tariffs and all that, yeah, some small manufacturers get hit with 30% tariffs, but the big ones where it matters, like BYD, they only cop the 10+% tariff, it barely brings them up to the same price as the locally produced EVs. So they've got plenty of room to play there. BYD actually makes a much higher margin on their export cars than even in China. So they can just adjust the price down, accept a slightly lower margin, and be absolutely competitive in Europe.
And tell me your thoughts on SVOLT waving the white flag and withdrawing, and Northvolt against the ropes. What are your thoughts there? Is this mean we're going to have an onslaught of Chinese battery cell manufacturers now taking control of Europe?
Yeah, I don't think there are two ways about it. It's very simply survival of the fittest, and in the batteries game, the guy with the largest scale more or less wins, and of course the better manufacturing equipment and processors and all that. But basically, it comes down to can you produce something cheaper than your competitors, or if not, are your customers willing to accept a higher price? Like, we have not seen any customers willing to pay for green lithium or any higher price commodity just for the sake of being non-Chinese or more ESG aligned. The same is happening in batteries and car manufacturers. Nobody's willing to take a higher price battery if they can get a cheaper one in China. Countries like, of course, the US have been trying to they call it level the playing field here by giving IRA credits, right, to the non-Chinese aligned production supply chain. But I don't think the decoupling will work. I mean, I think I mentioned that the one-to-one question and answer. Somebody posed this question. I was quite blunt about it. I don't think the decoupling will succeed.
When you say, I mean, there's Panasonic and the Japanese, there's the Koreans who are active in the US and also, I guess, in Europe. Are they competitive to CATL? I mean, the Chinese don't have 100% market share. You don't
They
see
are
them
not
cost competitive?
No, they're not that competitive. Just look at how high their input costs are versus the Chinese. And they're not vertically integrated like the Chinese are. BYD hasn't yet got their own mines, but CATL does have its own mines. So does Panasonic or LG have that? LG has some offtakes, but they are not as vertically integrated. And of course, they cannot fight the Chinese of pure scale.
So, I mean, is it Tesla versus the Chinese and that's it? The rest of the battery EV world is destined for the dustbin?
Well, that's what the IRA is trying to prevent, right? And to the extent that the IRA is maintained, it is not repealed by potentially Trump, then there is a bit of a wiggle room for the non-Chinese supply chain to exist. But then it will all be surviving purely on what you could call government subsidies, right?
Yeah, look, we just may not transition as fast to electric, right? If he puts 100% or 1,000% tariffs on imports, and it's unclear whether or not he will welcome BYD or CATL to build cars in America if Trump wins. But he is all for drill, baby, drill oil. Again, he likes Elon Musk, but, it could be hybrids. It could just be, making big, ice trucks, or SUVs for quite some time. We'll see. But okay, the lithium story, though, it has pivoted a bit to my frustration. What was exciting a few years ago was that the U.S. and Europe kind of joined China, and like the lithium story became a kind of a global story. And it's become, again, a China story, from a demand side and, watching the supply as well. But the data points there are strong. And we are rock stock channel, so we're very focused. Always have thought the upstream raw materials, go long what China is short. And it still is true that China does not have the best lithium resources and therefore will need to acquire resources outside of China, but they do have some resources inside China. And you've been following some of those because we were talking about like there's this narrative now. There's always narratives every 3 or 6 months. New narratives are created, little micro narratives within lithium. So the Rio Arcadium deal, that there's some narrative out there that brines, it's all brines, that's the best way to go. And they're at the low end of the cost curve, and maybe Australia and hard rock, less interesting, or maybe Quebec, and elsewhere. So I think about that, and then I think about, well, okay, how do you invest in Brine as an equity investor? And SQM from Atacama only gets 15% economics out of Atacama, and then they have other businesses in there. Albemarle, their Atacama is mixed with a lot of other stuff. So hard to play Chilean brine. In Argentina, you used to have Orocobre, then Allchem, and Livia. At least you had 2 producing choices. Then you had 1 in Arcadium, and now you have 0, or you have the only one you have is kind of Lithium Argentina from a producer. But you were saying, well, no, there's some ones in China as well. And you say, okay, that's true. You could play Ganfeng, for exposure to Argentine lithium. And also, maybe Chinese, related lithium. But like, so do you concur with this narrative that, brines are, now should be, the focus, versus, maybe harder. Like if you look at the landscape of the world of conventional brines, conventional hard rock, DLE brines, sediments, like where are you positioning your portfolio? Like what do you prefer? And if you can't speak about specific stocks, that's fine, but general kind of types and geographies. And if you could talk a little bit about China, because we don't talk too much about you. We were talking before we recorded that like Ganfeng looks interesting, and I would love an update, on that.
Okay, cool. Big questions here. Okay, I'll probably start with the bigger picture on carbonate versus hydroxide, right? And I think for the near term, we are probably leaning more towards the carbonate side, simply because LFPs are the dominant battery chemistry today. And I think it's going to stay this way for probably the next half decade. All the mass market vehicles, all the ESS, the buses and trucks, they are all going to be on LFP. So to the extent that carbonate is preferred for LFP versus the conversion that hydroxide has to go through to become carbonate before it can be used in an LFP battery, we would prefer the more direct source of production, which are brines. I think you are quite right to say that there are not that many ways left to play brine. We were actually very heavily invested in Arcadium, and in September I had just started. I actually trebled down on our position in Arcadium in September. It was looking way too attractively priced, 0.4 times book, and I know that, and I was hoping to add in a little bit more over the next few months, and then of course Rio comes in, takes it out in the space of a month. So I think, actually at that point in time, early October, I had about 6% of the portfolio in Arcadium. That nearly doubled in a month. I'm not too unhappy about it, though. I think if Arcadium had been left as an independent entity, we could have made a lot more in the longer term than that. But it's okay. I'll take the bird in hand today. Put it in some other places. I am of course happy to continue looking at more brine plays. Argentina has a few other brine players that are interesting. Big, scalable, some small and scalable. I think you mentioned Ganfeng. Yes, I like that. They are, a lot of people think of them as purely Chinese converter, of rock to battery grade material, right? But I see them as much more. They have their own small, but is there the battery line? They have stakes in Lithium America, Argentina's projects, so they are very, very vertically integrated as well. So I see that is actually that is something very similar to Arcadium, just that of course no other Western big mining major is going to take out Ganfeng. It's not for sale, one, and two, you're never going to get IRA credits out of that route, so that's not going to happen. But for us, we do invest in the Chinese lithium companies as well. There are brine plays in China. There are rock plays in China. Of course, most of them being lepidolite for the rock, but some of them are at okay costs. So you could actually get into some of these players at what is, I think, today a very low point in the overall lithium cycle. Yes, you earlier said that some of these stocks have gone up 50, 100% in the last couple of months, but the bigger picture is that they have fallen 80, 90% from their peaks 2 years ago. So 100% up from a 90% fall is merely back up to 20+% of the high. So there's still a long way to go if we were ever to go back to even $20,000 lithium. I don't. Okay, why I'm avoiding talking about individual stocks as much as I'm a fund manager. I don't want to come across as talking my book. I don't want to come across as recommending individual stocks because literally my regulatory license forbids me from doing so. So I will not recommend any stocks. But I'm happy to talk about the broad themes, and everybody's a smart listener here. You can figure out which companies I'm talking about. Yeah, rock. I think
okay.
Yeah, rock I think is perfectly viable. I like the traditional in the current investing environment where lithium prices are at cyclical lows. I like being in the proven traditional production methods that from today can get you a very, very decent, in fact, pretty stellar return over the next 1-2 years without having to go for the fancy production methods that are unproven or even technologically, not basically unproven. So brines will not be enough to fulfill all the lithium demand that we see in the next few years. That is for sure. Brines just take way too long to scale, and there are actually not enough supply of high altitude, low precipitation, dry areas, arid areas where you can do cheap evaporation ponds. So that already limits the supply of brines. Rock will then have to fill the bulk of the lithium demand. So rock will be needed. There will be a conversion cost going through the converters in China and then coming onto the market. So I think where the supply curve is concerned, it will be mostly brines, most of the traditional rock, and then comes the clays and potentially the DLEs. And I actually wouldn't say that lepidolite is all the way at the far end because they do have a very broad range of costs that some of them actually come right into the main rock, traditional rock costs. So I'll leave it there. I think a lot of this space is playable, just focusing on the first and second quartiles of the cost curve.
YJ, in terms of looking at potential greenfield projects, how do you think or compare in terms of timelines and capex for conventional brine versus, say, DMS only hard rock being shipped to China? So, Brazil or wherever else is pretty low capex getting shipped to low capex China versus a greenfields brine that could take quite some time to be developed and with a higher capex but a great opex. How do you sort of look at your NPVs and how you? I know it's project by project, but how do you kind of, where do you lean on that?
I have no specific preference either way. I like companies that have low costs, can execute and deliver well. Yes, Brazil, of course, the only producing player there in a big scale is Sigma, right? So they've done pretty well in execution and building out the first mine at a very low cost, and I think they actually have managed to deliver good product at a great OPEX as well. And their next mines are coming up. So that's one of the ways that low cost supply is still growing into the market right now. And I think it needs to be there anyway. The demand is still growing 20+% a year.
So we had this sort of conversation just before we started as well, as if you look at what Albemarle or Arcane were mentioning about what is incentive pricing to do greenfield, a lot of it's around the 18 to 20, I think some of it above. If I looked at your chart, even on the lepidolite, and if we look at some of the African ores, etc., there's a lot of potential supply that can come on between $10,000 a ton and 20. I think kind of the pushback that all of us had in the industry in terms of what some of the banks were suggesting is I don't think long term you can just have $11,000 a ton go for 5 or 6 years. It's just too tight. But at 14, 15, does that open up quite a lot of avenues for you in terms of who can come on?
Yeah, of course. If we were to go from 10 to 15, that's a 50% increase in the lithium price. Many of the companies in our portfolios would probably double. But yeah, I think that even a 15 or close to 20,000 would allow many of these guys to be quite healthily profitable. I don't think the lithium price needs to go to the mad 80,000 level or even 50. I think that's probably an overreaction of a small market back then. But I do think that it will not be a case where the price stays lower for longer. When the price was at 80, everybody was saying higher for longer. I mean, I was not one of those that said it was going to turn around and crash that quickly. I'll admit to that. I actually thought it would be higher for longer as well because there was nobody could have seen the lepidolite and the African supply come online that quickly. So that caught the whole industry by surprise. But now that we are on the flip side of it, being overly pessimistic is also probably wrong. I mean, we're all talking probabilities here, right? I mean, it doesn't make sense for most of an industry to be negative cash flow for more than, say, 5 or 6 quarters. That's the experience that we have from the solar industry, one that is extremely boom bust cycle. The main fund has 15 years, right? So it started in 2009. The first solar boom came in 2012 and then it collapsed. Next one was 14-15, boom and bust. And we are now seeing the next one. We are in the middle of the next third or fourth bust right now. It's always the same pattern. The industry is loss-making for about 5 to 6 quarters, and then supply leaves the industry. Is too painful to hold on. Even the big players start talking about, having a little bit more discipline. And that's exactly what we have seen in the lithium space as well. So it's been a little bit more than, I think, a year since many of these companies started going profit negative. Some of them have now become cash negative, which is why we start seeing plant shutdowns across Australia, across even some in Africa. I think was it Sino mine that shut their the petalite section of the Bikita mine. So we are seeing supply leave the market already. We are seeing supply being deferred. All of the main lithium players, whether greenfield or brownfield, have been talking 1 to 2 year deferrals to their main projects. So I think you saw my slides. Our expected supply for the next 2 years actually fell 17 and 21% from basically the start of this year to September. So
what price would change your mind and turn those numbers around where you'd see supply come back on?
we are now at about 10K to the carbonate and about 800 to the to spot, right? I think we're talking 15 plus for carbonate and 1,002 to 1,003 for spot. Before these guys start thinking about coming back on. But these things happen with a lag. So as we have seen, CATL shut down their mine probably 6 months later than they should have. They should have pulled the trigger and shut down their mine, 6 months ago. But no, they didn't. They only just did it. These companies don't just supply. It's not it's not like an analyst's model where you just shift some numbers around and supply magically appears, right? No, it doesn't work that way. You have to hire people, you have to train them, you have to get them back into the mines, you have to ramp it up again, you have to do a whole lot of things before mines can shut down or come back to production. So we're going to see these lags happen. And when these lags happen, it also might be the time when the world goes actually into undersupply. Maybe they overcorrect. Some of demand next year might be stronger than expected. I actually do expect it to be, because the one thing that no analyst out there is saying is a resurgence in the growth rate of lithium demand. It's always been down every year, down year on year. But when prices collapse, growth rates tend to surge. So we see that in solar, right? So batteries as well, like you mentioned earlier, Tesla, their Megapack business basically grew 50+% year on year, correct? And that is one single company. There are many companies in China, Taiwan, who are actually doing these grid storage products, and all of them are seeing massive growth. I've spoken to a few of the Chinese players. I asked them, do you have any problem selling your ESS products? No problem. Where are you getting your batteries from? CATL, BYD. Basically, they just go for the best of the best in class. They just and these best in class are the lowest cost, right? So there's no real competitors out there. And why? Simply because the solar installation demand is so strong out there. Last year we were talking 444 gigawatts. This year we are at 600, and with electricity prices going negative in many power markets across the world, in the middle of the day, these new projects have to come with batteries. No batteries, your electricity basically just gets grounded. So ESS will be a huge thing for the rest of this decade.
I agree. I mean, that's why I've been hugely bullish on it. And at these prices for batteries, now is your best chance to really load up. And not that we're going to discuss it. It's also why I like silver, which you did put at the end of your presentation. So I'm personally a bull on silver. But is it in terms of legislation for putting backup storage versus just price incentives and the low cost? If you can get electricity for nothing in the day to charge up the batteries to use, are we likely to see the sort of combination of solar and backup and battery sort of rise?
It's happening at both the grid scale and the individual residential scale. So what's happening is that big solar plants, 600 gigawatts, are being put in the world. Many of them will come with multiple gigawatt hours of batteries. So that's one thing. The other thing is that with batteries being so cheap, even to the retail level, I'm hearing stories about people in Germany basically putting up a 16, 20 kilowatt hour battery in their house. And that takes them effectively off the grid almost the entire year, even in winter. So the house does not require that much. They end up in summer, they sell a lot of power to the grid. In winter, they have about 3 days of electricity use stored in the battery, and then it slowly recharges over the winter day. But then basically they are now running their air conditioning, their heat pumps full on through the day, absolute comfort in the house. They're running their TVs, their washing machines, and then they're driving around for free. You cannot. This is something that in Singapore, I wish I'm absolutely envious. That you can enjoy these things in countries where you have your own roof over your head, right? That's literally all you need: a roof, some space, put some solar panels, stick a battery in, and you are saving yourself hundreds of dollars every month just from gas prices alone.
So commercially, it's also hugely beneficial.
Of course. I mean, this is what is driving the entire battery revolution. It's economics, right? People respond to economic incentives faster than any other incentive. So, well, short of being naughty with a whip, but yeah. So yeah. So this is what's driving the whole market.
YJ, I wanted to ask, you brought up the carbonate versus hydroxide question in relation to brines. I guess my question is like everybody thinks about hard rock as going to hydroxide because that was always the argument for the past few years that the world's hydroxide, hard rock is cheaper, but people don't talk about hard rock to carbonate. If you look at Lithium Americas and also Ioneer, both of which are going to get big checks from the U.S. government, they're making carbonate. In the case of Ioneer, they're going to be making technical grade carbonate, and their customers like EcoPro, the cathode customers, are then going to convert it into hydroxide or they'll use it for carbonate. So my question is, hydroxide looks to be a bit of a bust in Western Australia. And, Tesla is trying at Corpus Christi, AMG is in Europe, and Caliber is in Europe. So, I mean, hydroxide's still there, but I'm thinking hard rock to carbonate, right? We like Quebec a lot, and, and in the US, and also Ontario. Do you see spodumene being converted into carbonate? Or, I'm just thinking that no one's talking about this narrative. I just think that like, oh, well, good hard rock assets could easily be converted to carbonate, as has been the case for decades in China, right? Like Ganfeng and Tangxi are still converting Australian hard rock into carbonate.
Yeah, I think I mentioned earlier there is not enough brines to produce all the lithium that is required for the carbonate demand. So spodumene has to enter the supply chain for carbonates. But at the same time, I don't think there's really a big theme for investors to play here. I mean, the only play you can do is Ganfeng Tianqi, right? And a few other smaller Chinese names in the spot conversion game like Chengxin maybe. Yeah, so there are not that many plays you could do on this theme. But yes, operationally the industry has to do this.
Yeah, I wasn't so much suggesting it as an integrated play, but it's more this, to the extent that there's a narrative out there that hydroxide's growing slower, even though a lot of hydroxide is going to be needed, or hydroxide is exceptionally difficult, and how can kind of Canada look at the Western Australian example, and Canada will struggle. I think you may start seeing a shift in the same way that Lithium Americas and Ioneer are making carbonate. There may be it may be easier for some of these Quebec stories. I mean, Sayona and Piedmont, have a half-built carbonate plant. They might go carbonate. Who knows? I just think that this needs to be talked about a bit. It's not like all North American hard rock is a hydroxide story. I think it will become a carbonate story to the extent that carbonate becomes continues to be highly relevant for energy storage. It'll happen here in the North American market. You made a lot of comparisons of lithium to solar in terms of boom bust capacity and the like. I don't follow solar very carefully, but when solar booms, okay, are are solar stocks doing well?
Yep, they go up 10, 20 times.
Is that right? Okay.
Mm.
Okay.
And then when they crash 95%.
Okay. So I'm often making kind of comparisons of lithium to like my history in iron ore. Rio, when they did their cost curve chart, compared it to copper, not iron ore, which I found to be a little bit surprising. But you could make an argument that lithium is more like aluminum because of the bauxite to alumina to aluminum. But that's not a great, comparison if you're optimistic about lithium. If you look at Alcoa, 150 years history, I mean, I think they have like a $8 or $9 billion market cap. The aluminum story has been a persistent, oversupply story for a long time. But that's good to know, the comparison to solar, these things boom. I guess final question always is on price, and everyone points to kind of 80,000 as that was unsustainable. There weren't a lot of trades there. SQM, I think, peaked out at like 55,000, but saw a very smart fund manager who's played the market very well in New York. I met him last month at Climate Week, and there's this thought here. You said that the lithium price is at 15,000, or 12 to 1,300 spot. Will be economic, and some of the stocks you own will double. But the concept of things kind of just like leveling off there is highly unlikely. What's likely is that like by 2026, it'll go to 30, 40,000 again before kind of crashing down. Do you subscribe to that view?
Absolutely. I mean, it's a commodity. It's a mining commodity. So these things tend to move with in large cycles. It took a very long time for this oversupply in the last couple of years to be worked through. Now companies are all scared. Financing is very, very hard to come by. The pressure is building up. I mean, it doesn't show in the lithium price yet, but the way I see the supply being pushed back, the way I see demand continuing to grow over the next few years, I think, based on my model, that next year, contrary to what many analysts are forecasting, next year we go maybe towards the end of the year, but we go into a balance and maybe even a slightly undersupplied market. And the price of lithium will move even before the physical goes undersupplied. I mean, the lithium market is a forward-looking one as well. The stock market tries to be forward-looking on the lithium price market. So stocks will move ahead of that. Maybe that's what we're seeing right now. But the fact of it is that operationally on the ground, many companies are finding it very difficult to get financing. When you can't get financing, your construction time gets pushed back. Many of these projects, why Arcadium sold to Rio that readily? They were in the midst of pushing back so many projects. Rio was coming in with a huge amount of nearly unlimited money. It was a match made in heaven for both of them, right? There won't be that many deals, I think, being done like this. So for the most part of the industry, everybody's still struggling to find financing to build the next phase, the next mine. In the meantime, I think we go into a small undersupply by the end of next year, and then 2026 that deficit starts building. But by that time that the deficit is apparent, and financing becomes a little bit more available, we are still staring down a 12 to 24 month construction time for most of these mines, right? And then we get the usual bullwhip effect of supply chains. I think that's what we are experiencing right now. Pressure is building, and well, let's see whether this thesis gets proved out in the next year or two. But I think the weight of history in commodity markets is heavily in favor of this.
And it has been lithium's history. Lithium has been the best performing commodity 4 of the last 10 years. It's also been the worst 4 of the last 10 years. And the cycles seem to be about, 2 years apart. So it sounds like you think the lithium equities rise now is in part forecasting lithium price rising sometime. It's forward looking in the next kind of few months, and then so that puts us into the early part of next year, and then you're suggesting those lithium price rises are forecasting, I guess, an imminent whittling down of the supply, and then a supply surplus turning into a deficit late next year, and then into 2026 the deficit will be apparent. Everybody will be saying, so prices will continue to rise, equities, could continue to rise, and then you'll have a financing boom, in 2026 to catch up, right, to this supply deficit. So you're a lot more optimistic in terms of when this surplus goes away. There are a number of people out there who just think that prices rise 25%, whole bunch of supply comes back on the market. The Chinese can be faster, layoffs and rehirings, are easier to stop. And they're not calling for what you're calling for as soon as you're calling for it. They see 2027, 2028. So look, that's what makes the market. We hope you're right. I think we're going to subtitle this Rock Stock Recap as a Raging Lithium Bull, a Raging Bull, to
Whoa.
one of my favorite movies. Is that overstating it, YJ?
Probably a little bit.
Okay. All right. So for a teaser, if you've watched our videos before, and we do like to make rock and pop culture themed, teasers. So what's your favorite music, or something that maybe new I haven't heard of that's popular in your part of the world that you like to listen to that we could use to summarize this interview?
Oh gosh, I mean, this came out of nowhere. I'm not even a pop music kind of guy.
What's your favorite jazz or opera or?
This is going to be absolutely boring. I'm a bit of a pianist myself, so my favorite musicians are all composers, piano composers.
Okay, Mozart.
A little bit
one?
more towards Beethoven, Rachmaninoff, and Chopin.
Rachmaninoff and Chopin. Okay. Any particular? Do you play?
Yeah, the piano. So I mean, go with Rachmaninoff. I love the guy. I mean, he's punchy.
Okay. What's your favorite piece that you would play or you would listen to?
The Prelude in G minor, the one that goes dun 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 there, and it's punchy. It's loud. Yeah.
Prelude in G minor from Rachmaninoff. Okay, we got it. Perfect. It's
got to be the weirdest.
It's not weird at all. I like classical music. I just haven't utilized it much, but in our writing. But okay, Rachmaninoff, Lithium, YJ Lee, an energy transition investor at Arcane Capital Advisors. Thank you very much for joining us, and we look forward to catching up with you in a few months' time, and hopefully your forecasts will be correct.
Thank you, Howard. Thank you, Rodney. It's been great.